Well, another night of divergence in US trading. And once again, we've got different results for the different indices in the market. Now, let's be clear. Last night, the US S&P 500 and NASDAQ indices hit record highs once again before pulling back into the close. The Dow was actually down around 0.5%, and it suggests that that narrow leadership of the rally that we've seen in the US is starting to be questioned by investors. We saw a real divergence within tech stocks as well. Unusually, they've tended to move together, particularly during this huge rally over the last couple of years. But last night they diverged, and we saw good gains for Nvidia up 4%, Broadcom was up 10%, but Apple fell 3%. And that divergence suggests that the nuances of individual stock is becoming more and more important to investors. We did also see inflation data. The producer prices were out last night. It was a softer number, and markets have taken it as a given that there will be 3 rate cuts in the US this year, and that there's a possibility of a 50 basis point rate cut after next week's meeting of the US Federal Reserve FOMC. I'm not as convinced as the market of that, but we can't deny the market pricing is reflecting that, and the gains that we're seeing in stocks is built on that. Any information that shocks that expectation could have a big impact in the share market. And tonight we have CPI data for the month coming out. And so that's one to watch tonight. It is expected that the headline level will tick down from the 3.1% that we saw at the last reading. However, the core level is expected to tick upward, and it is that core that analysts and economists will focus on. So something to look out for in trading tonight. But in the meantime, we've got positive momentum. Another market that has positive momentum is the Hang Seng. It was up a 1% today, despite more tepid performances across the region. It's now trading at a 4-year high over the 26,000 mark, and we've got plenty of upward momentum in the Hang Seng, and that outperformance we've been talking about as it plays catch up in valuation terms appears to be ongoing at this stage. The brief rally we saw in lithium stocks appears to be over. There was news out of China that the world's largest lithium mine will restart production earlier than expected, and naturally that had a huge impact on the overtraded lithium stocks here on the ASX. Liontown was down 18%, Independence Group 14%, Mineral Resources down 6%, and there's a lot of concerns that that very brief moment in the sun for lithium stocks has finished. A lot of these stocks gapped lower, and their charts do not look encouraging in any way. It just goes to show how much sentiment drives this sector, and that it can be fragile when sentiment turns. The question for analysts and investors will be, can it recover from these levels? And while there's certainly been a lot of froth around lithium stocks generally, and there's little doubt that they will have an important part to play in the future electrification of economies, the fact that these stocks have run so far ahead suggests that there might be more basing to go on before the real demand for lithium catches up with the share market estimates. Naturally enough, Pilbara Minerals also under pressure in this sort of environment. It was down 17% yesterday. It's the biggest lithium stock listed on the ASX. It's also the 3rd most short sold stock. Short selling occurs when professional traders and investors move into the market. It's involved in arbitrage, particularly index arbitrage, but also what's known as pairs trading or relative value trading, where professional traders go long in one stock and short in another, or long in a basket of stocks and short in another, looking to profit from the change in relative value between them. So short selling is an indication that professional investors are bearish about the outlook for a stock. The fact that Pilbara Minerals is the 3rd most shorted stock on the ASX should give some investors pause. This is a considered view from those who work full-time at assessing stocks, and its position as most shorted does suggest that there are concerns about the investment case in Pilbara Minerals. Of course, the focus for the GameStop traders and other Reddit traders in the past has been the potential for short squeezes in very heavily oversold stocks. The positioning at the moment at less than 20% of of the stock short sold does not really lend itself to a short squeeze in Pilbara Minerals, but one to watch. No doubt it will remain volatile, as will all of the stocks in the lithium exposures. But the big news overnight was in Oracle. Its shares were up 36% at the close, having traded higher during the session after it reported a huge increase in revenues over the quarter. 55% lift in cloud revenues was the main driver, and it predicts a 77% lift in revenues for the full financial year. That, of course, turned around investor views of this stock and caused it to rocket higher. Larry Ellison briefly becoming the world's richest man at the peak for Oracle shares in overnight trading. By the time the market closed, they had pulled back and he'd lost that title. That just goes to show how competitive that title is at the moment. But the good news for Oracle just kept coming. They announced 4 multi-billion-dollar deals over the quarter had been signed, including a $300 billion deal with OpenAI over 5 years. And the quote that really caught eyes and ears overnight was, "This is the best example of turning artificial intelligence buzz into tangible dollars." And it does look like cloud computing will be the area where AI has the biggest impact on the bottom line, certainly judging by Oracle's result overnight. We also saw Klarna list in the US. This payments and buy now, pay later group has backing from very substantial players around the globe, including Australia's own CBA. The listing last night was very successful. The stock up 15%. Recording a market capitalisation around US $34 billion. It's a tick for BNPL stocks, generally speaking. It has been a very volatile sector as growth was in question. There are some concerns around overvaluations in the BNPL sector, but nonetheless, the successful listing of Klarna likely to give investors and traders more confidence in the buy now, pay later sector.